Okay, what's going on? Good evening, good evening. This is going to be the recording for the daily recaps for um, this week, right? So Monday, Tuesday, and obviously today, Wednesday, being July 29th, 2026. And the reason being that or at least I didn't personally put up a DRC is because we were actually talking in the Discord a lot around this time. Like around market close, around like 4:30 Central, 5 Central time zone, about the setups from that day and some of the things that we took. We've had a pretty good week. A lot of setups have been presenting themselves, a lot of volatility. There's a lot of just a lot going on. So what I'm going to focus on in this call over the next hopefully 30 minutes max, 45 maybe to be like as far as we can go. I'm going to focus on the setups that we've actually taken in the Discord and profited from, and then talk to you guys a little bit about how you can start to learn some of the concepts and the locations and zones and stuff that we look for, as well as obviously how you can trade live with me inside the Discord. And so all that information will be in the description of this video. So you can always go in the very top of the description of the video and click to join the groups. But super excited for the community and super excited for the blueprint, right? The RSV blueprint to be able to help a lot of people, right? Because I do believe that through a lot of experience and a lot of trades that I've taken and just different markets and stuff that I've traded, that these concepts definitely work. Okay, so um, just kind of looking at what we were looking at to start the week, the market open was here for dollar index, and dollar was starting to kind of push, right? The weekly was showing more signs of strength as of last week's weekly was definitely showing signs of strength. So for me, as we get closer to tops or bottoms, right, when price is pushing towards a certain area, I understand that noobs buy tops and sell bottoms, so they're gonna trick people and fleece people, right? In these special levels, and we were kind of anticipating if we couldn't close bodies above the 100 and 160 level, right? We made a lower high in the zone. excuse me, a lower high in this zone that we could possibly roll back over to 150, right? And what that means for us is we were going to see, if dollar goes higher, we were going to see potentially liquidation on indices and futures. And if dollar was to roll over like it did here at 101.50, we were going to see, buy positions definitely present themselves. So first thing I'm going to do is, like I said, just really focus this mostly on NQ. Now, the going forward daily recaps, I will break down what we're really looking for when it comes to like NQ, ES, and YM every day. And a lot of the times, when I'm taking executions on NQ trades, people can be taking trades on ES, and I also have a blueprint for that asset as well because I traded that one for about 7 months straight, and then YM as well. I traded that one for about a year straight. Okay, so um, cool. So let's go ahead and dive in. That was pretty much a dollar bias, and I'll kind of like talk more about today's here as we get closer to the end of the call. So let's go ahead and go over to the. Make sure I have everything set up over here. And go over to the Discord. Okay, so this is going to be from Monday's price. I'm going to kind of like pan back and forth and over to higher time frame, lower time frame, but like NQ, and kind of giving you guys some perspective of like where liquidity was. But as you can see here on the right, this is what was the trade that we ended up taking on Monday. Was after the sell side move. I wasn't really in tune, excuse me, Monday, with price just selling off that dramatically, right, for a Monday. So I ended up waiting for a capitulation bounce play where we were able to play 5 times our risk, and then able to partial out of the trade, right? So most of the trade came in here. I'm going to break down this trade as well here in the 28,000s, right? 28,000 looks like whole level, 27,996. And so we took our entries there with about a 20-point risk, and we were looking for about a 60 or 100-point gain, okay? And so once it reaches that level, we usually trail out, and then we're able to go break even on the remainder of the trade. Now, this risk, I do believe this risk from this position was off on this because I was actually monitoring everything from the other screen. Okay, and so we ended up getting in, like I said, right in here in this zone here, and then I ended up trailing the risk up uh, to fit the trade. Right, and so um, that was Monday's trade. Okay, going over this one. Now, I didn't think it was really going to go back up to these levels up here. Now, I did have the idea that it would possibly go back up at least into these 28,200s or possibly key level. But it was a far fetch. I mean, but that was a traumatic fall here on the equities open on Monday. Price actually falls, makes that lower low, and then fills the FEG and rolls over. Okay, so I'm gonna actually go over that trade here really quick. Okay, so this would have been Monday. All right, so yeah, this would have been, let me take a drink of water really quick. Excuse me. Now, this would have been Monday's price. Now, the key level for me of the week, like when we were like looking at certain things in pre-market, was this 28,600 level. And so this red dot is indicating the New York Open. So the very first 5-minute candle, this is all you could see at one point, okay, was this, right? Price basically had just capitulated at the open at 20,600 and had filled the FEG right above it before falling. Okay, so price was definitely bearish in this situation. And with it being a Monday, without me seeing the signal that I would want to see, let me go back to here. With it being a Monday and me not seeing the signal that I want to see right at this time, I'm not going to take the trade, right? So the 5-minute has to be a lot more solid than that. And it can't really be a wick low like this, even though I've seen the sign of strength in that zone, okay? Now, as well, if you're looking left, you can see we had a new week opening gap. And so the key was to see if price could hold right inside that new week opening gap, like could it hold inside 28,415s, 425s, like 400 level, or could it move down into this candle here, which would have been essentially the H1, or excuse me, 15-minute demand candle that we wanted to see if price could actually extend down to. Now, when price got down into this level, I was looking potentially for buy positions off the 28,250s, but because price wasn't confirming anything but lower lows and lower highs on the 15 and 5. I was waiting personally for us to at least slip below this low. And then I was looking left, which I'll show you guys here really quickly. I was looking left here on the higher time frame. So this is going to be our 4-hour and our 1-hour. This is our 1-hour time frame of Monday. Okay, so if you're looking and you're trying to see like what I'm showing this price here on the 4-hour, which is going to be this dot here. And then on the right screen, I'm showing where it's at on the 1-hour. So I was waiting for price to go down and clear this 1 and 4-hour low. And then when you look left to get right, so let's just look at the 4-hour by itself. When you look at that area and you just kind of just scroll over to the left, we were inside this imbalance here. Okay, so like when we got below here, this was us getting into this 28,200 was us getting into this imbalance here. So for me, right, I was pretty much looking at this at the end of the day, like, didn't really know what was going to happen. But the position that we ended up taking, this was from what was this from? This was from Friday, right? So I wanted to see this low taken from Friday. So this is the previous day low on that day. Okay. And so now when you go back and you look at what we're talking about here, right? And we go back to the middle screen. Right. So we're taking that previous day low. I was waiting for price to get down and actually confirm a low. Okay, and so we didn't do that until close to, it looks like it was around like 9:15, right? So 5-minute was coming down, or excuse me, 9:51 is when we took the entry on Monday. So 9:40 to 9:45, price is still capitulating. So essentially all you can see on a 5-minute is just price doing this right here, right? And 15 and 5 minutes are just they're just crushing to the lows. Now, the thought process that's going through my head is like, imagine putting yourself in the individuals that sell these positions. Let's say you sold this New York Open and caught an amazing move down. Okay, based on how we like to frame this, we like to look for that 1 to 3. let's say you play down all the way to this position. Now think about it. At this break of structure, individuals are already up 400 points times whatever they risk too. You know what I mean? Like this is just how we would have set it up, but they're up 400 points regardless, right? Times $2 a point, $4 a point, $10 a point, $20 a point, right? It just depends. And so for in order for these individuals to get out of the trade, they have to be looking left to get right. So they have to be looking for an area where they're going to set their buy limit on old lows, or emotionally, right? They've gotten to a point where they broke structure that however they take profit, they're going to press the buy button, right? Either they emotionally do it manually, or they have, set take profits or limits, where the market's going to trigger and take them out of the market. And so, what we're waiting for on Monday in this situation is for a 5-minute sign of strength at the right time. Okay, so if you're looking here on the 5-minute, let me go back to here. Okay, and so 9:45. So I like to take trades in the first 15 minutes of the hour, last 15 minutes of the hour. Now, this trade, the only reason I didn't take the shorts here is because I felt like I just had missed it, and it didn't really give me a clear area. I felt like at 8:50 to 8:55 here, it definitely filled the FEG and then rolls over, but it just wasn't clear enough for me. So what we ended up getting here is we got a 5-minute engulfing candle, and then what we ended up playing was, let me show that really quick one more time. So this would have been 9:50 a.m. So right here, this was 9:45 a.m. And then our entry, right, was right here in that 28,000 level, right? So we were in halfway of 50% of the 5-minute candle. That's the location we like to be, especially like under this old low. And then we were getting a 1-minute price to confirm past 2 candles to go to the upside. So we were looking for at least 5 times our risk in that setup, okay? And so how it looked when you actually plotted it up, I can plot it up here so you can just kind of see the thought process. Is we had to wait for the fall, right? We had to wait for the capitulation. We had to wait for the higher time frame area on weekly, daily H4, right? And we had to wait for buyers to step in, okay? Now we ended up taking that entry here in the, like I said, 28,000, 27,996. So let's just plot this here, 27,996, and then we'll do it to the T. So then 99650, okay? And then we had 1 to 5 is what we were looking for. And then I want to go to the 1 minute and show this same area, okay? Because that's that same trade that, like I said, that we took over here and breaking down, okay? From Monday, July the 27th. Okay, so now we waited for that price to fall off a cliff, and we were waiting for shorts to start to cover their position, okay? And so 5-minute candle prints here, 940, 945. So it was more of a timing trade because a lot of times, like let's just say, like when I take this 5-minute trade, I'm waiting for this 5-minute to engulf like this, okay? Like this candle did here, and then usually for it to come back and test into that demand. But excuse me, because of how stretched we were from New York Open, right, being 600 handles down on the day, right, in the course of like an hour and 30 minutes, you have to be ready at the right time for that shift in price delivery, okay? And not, like I said, you're not always going to be right about the direction, but what you want to be thinking is how much can you capture in our multiples and situational plays during those timings and during those that criteria and variables that we set. Okay, and so this was a pretty clean setup, ended up delivering pretty well for us. Obviously, you can see 5 times our risk here. And then when you look at the price, now it didn't from the fall to the drop, right? Like that's what I like to look for when I'm looking at plays like this. So from like this high here at 28,700 down to this low here, 27,000 like 937s. Okay, it didn't even show any strength to get back above the 50, but it did produce just enough to produce a profit. Okay. And now people did continue to play this. I thought it was a really good play again. Like after it obviously engulfs here at 9:45 going into 10 a.m. And so like that's the first move, right? And so we were already done with that move when it comes to futures. Then when it came to personal accounts, I'll kind of show what I ended up taking on that day too. Okay, so like usually the first move is never the move that they're actually going to take. And so that to me, when you can see that that's a 15-minute engulfing in the first 5-minute push, right? That's not the mitigation. That's just the first response, right? It's kind of like a paramedic, right? It's the first response to such a massive fall to the downside. And so I already know usually I want to take as much as I can on the way up, right? And then if I see price and time align themselves again inside the special discount demand zones, right? Then I'm going to take the trade again, okay? And so we capitalized on that. That was the end of the stream on Monday. And then want to go over uh, the 1045 position because I thought it was pretty good too, okay? So looking at the 1045, now let's say we were already done with this position here. Now price comes in here, if you're looking over here to the right, price comes into 1035, 1040, then you have 1040 to 1045, then you have 1045 to 1050, 1050 to 1055, and then 1055 to going into 11 a.m. price starts to break out, right? Now, what my eyes can see on this time here, right, is prices fell off a cliff. Overnight shorts are in a massive profit, and the 15-minute, right, is still responding inside this demand candle here. Okay, so for me, until price shows me like a sign of weakness on like a line graph or just a body candle closure to the downside, like so something like this, or like something like this, and then it feels like an FEG and then continues to roll to the downside. Until it does that, this area, especially based on the context of how price and time and everything is looking for the day, this is still a bullish area to see a response of short covering if they're not getting the delivery through the key level. Okay. And so right here, this is where I'd say I like to look at price in the first 15 minutes of the hour, last 15 minutes of the hour, and like 5-minute candle closures. And so playing this down in here, I would have liked this. So let me make sure it goes back to this day. All right, I was liking this area here, and then I was liking 1045 going into 11 a.m. And I want to frame up the 15-minute demand zone. So this is the one I was trying to frame, the 1030 to 1045 candle. And then once I was getting signs of strength on the right side of it, okay? And so here's kind of an example of um, where you could be like, where I was like really looking to take that trade on personal was kind of like essentially it could be a little late, but it's not because of how the price is going to run. But 1 to 5 from this zone here, and then price was essentially a little late. I feel like if you took it on the 5-minute break, you had to be looking at this on the 1 minute. So we ended up, I think that's where we took it. Let me look real quick. Yeah, so we took this one when it comes to CFD, we took this at a lot lower on the reclap. Okay, so we were already done on the first wave because that was the only move that really presented that was an actual move that was good. And then the reclaps in here, they were a little bit lower. Okay, so we were looking at 20 levels, right? And then we were looking for right before that candle was about to pop here on the 5-minute, and we were playing inside the 5-minute demand candle and wanting to have our order. Because what we were wanting to see on the reclap is like if this wasn't the move, like the one that we took off the first excuse me here, on the move that we took it down in here, and like this wasn't it, that we anticipated to come down like we're seeing here on the left side, right? And then to go maybe break higher to start filling FEGs on that side if it was going to really short cover and if bulls were really going to step in. Okay, so that's a whole other trade outside the stream, so let's focus on the ones on the stream. But that did end up panning out really well. It literally went up and top ticked this area of 28,200. Partials delivered for a really nice trade on CFD, and then the rest did come back for a break even for those small runners, which was fine. Okay. Okay, and let's go to Tuesday now. Just lining all these up really quick. Okay. So now we'll talk about Tuesday, okay? And then we'll talk more about today's price, okay? And so let me make sure I have this pulled up and it's recording still. Okay, cool. Okay, so Tuesday's price, so we're coming off of where we took small buys, right? Capitulation just falls over on Monday. Now on Tuesday, the very same thing, this red dot is going to be where New York Open was. Now, pre-New York Open, okay? Pre-New York Open, we have, I just want to show kind of like what we could see, right? 15-minute. Right, pre-equities open, we had pretty good draw on liquidity on the downside, right? I was calling out these areas here, especially if we were going to continue to get the bullish dollar, that these were low resistance lows, right? These were, to me, buyer liquidity that they would definitely like to run. So when I was seeing that, and then I was also taking into account that, where is that overnight trader? The overnight trade for the open was here. Okay, so make sure I'm on the right screen here. All right, so the overnight trade was here and price had already pushed down this far, right? So when you look at that, really, right, price is basically down almost 300 handles from the overnight. So they're at an advantage at this point, okay? And so for me, what I wanted to see at that equities open is I wanted to see them blast through the 27,850s, right? And then possibly go lower, right? When you start to look at the, let's move over here just really quick. When you look at the higher time frame, right, and you start to look um, at these lows, okay? So like we were looking at, this is the New York Open here that we're looking at on that screen, okay? And we were looking for price to actually push lower through those lows, and then where was it going to respond, okay? Now, again, this kind of turned into a very similar situation as the previous day, is that when I see capitulation at equities open, there's already overnight liquidity on sell side. A lot of those individuals are usually going to cover their position, which means they're going to put buy limits or emotionally press the buy button as they take profit, all right? And so what we were anticipating and waiting on Tuesday was for them to go ahead and clear these lows, right? Now, I will say this as I go back and look at this, because I was looking at some of the film yesterday, how they filled the 15-minute FEG and how they actually, really what I'm focused on is the 8:25 to 8:30 a.m. 5-minute candle pre-equities open, right? Because as you can notice here, they continue to fill the FEGs pre-equities open and then roll over. Okay, and so it's a pretty good sign. Now, I don't like to take that first one because there's lots of manipulation when you look inside that 1 minute. But when you look inside this candle, when you can only see it from this perspective here, right, and then you see what actually happened in this 1 minute after 8:25 to 8:30 closes, and then 8:30 to 8:35 opens, right? This is essentially what you're looking at here, right? The manipulation was in the equities open candle, and then price rolls over and falls. So the very first minute, now this is something that I wanted to be clear with the Discord and the premium group, right? Is like how we handle, shorts. Shorts are short lived, and then you also need to be really on point with wherever you enter, really focused on when you go 2 times your risk, protecting yourself or looking for sure target to, trail some risk out. So didn't call this one out because it was so fast compared to what I'll explain for Wednesdays. But as soon as this candle closes 8:30 to 8:31, I like this area right here. So make sure it goes back again. I like this area here. Okay. Anywhere pretty much close as you can be to New York Open. Okay, so somewhere like in here. Most people aren't gonna take it like right in here. They're gonna, probably wait until it falls a little bit. So, like I said, if you're not being very pushy at the equities open, which I never like to take trades until the first 5-minute close, the next best area that I thought was really good is like you got a 5-minute. This is gonna be the first 5-minute candle now of equities open here. And that first 5-minute candle does what? It closes bearish, right? But what does it do again? Okay, right? First candle of equities open, right? Maybe you don't play that 1-minute area because it's too testy and kind of weird. But first 5-minute candle closes bearish, but leaves behind what? A fair value gap. So inside of a 5-minute fair value gap, what I'm looking for in a 1 minute is an order block candle to form, right? Or a supply candle, whatever you guys like to call it. But what I'm looking for is price action that does just like this here, okay? and then I'm wanting to frame up the 1 minute signal break of structure with a 20 handle risk, right? And then play this through the liquidity. Now, the reason why I didn't play this one as well is because I felt like we were still way too close to the low end. And I don't want to, like the concept of trading or buy low, sell high. So I kind of felt like essentially if they bought this up and I got stopped out, it was because I was selling at a way too low of an area. But again, like I said, in this situation, based on what the 1 minute price was presenting, like even if I waited for this here, just kind of want to show this on 5 and 1 minute at the same time. Even if I would have like inside this candle, right? This green, this, let me do this here, right? After that 5 minute close, 30 to 35, right? Even if I want to take this area here, I could have waited for this candle to close like this to confirm the price, right? And then seeing how this candle printed next, okay? And then as soon as it tapped into this area, could have still had a 20 handle risk that goes through a clear, obvious target of liquidity. And now here's the thing about shorts are short-lived. As that price would have moved, you know, 3 times my risk, let's just say 1 to 2 here. 1 to 2 is already here. So when price would have got to 3R in my favor, right there in that position, you can go risk off, okay? In a position like this, especially on a sell side move, right? Because shorts are short lived, and usually they're just going to crank to the spot regardless anyway, right? And so like I thought that was a pretty good move for a sell side down if you're gonna just be able to track it down and then trail your risk and just really track it off. Thought that was really nice. Okay, now like I said again, the position that we ended up taking, I will go over here really quick. I ended up taking the, make sure I'm on the right day. Right, I did not take any of those shorts, but those like after this week so far, that's something I definitely would have taken. Okay, now on CFD, right? On CFD, right? On personal, I did like to take as we got down into this was like 9:20. So what we ended up doing on Tuesday is we ended up taking a break after 9:15 went to 9:20 close. I said I think we're gonna wait until the last 15 minutes of the hour, first 15 minutes of 10 to see if they V-shape recover because price was just pummeling to the downside and just falling very fast, right? And so we took that break, and as we were on that break, I was like mixing some more coffee. I seen this 1 minute shift in price delivery here, right? And now I was looking at this 5 minute candle and wanting to make sure I got an entry inside of that candle. And then price pushed back down right into it. And I was able to take a small trade. Okay. And I'll show that trade here. All right. I was able to take a small trade on personal, right? Because I wasn't ready to take it yet without that 5 minute signal on futures on the stream. But was able to take that here and then was able to partial out at the I think it was like the 100 point mark was like really, really quick. So I was able to parcel out there, and then we got back on stream, and then we ended up taking the position here that I'm about to go over after we got the 5 minute sign of strength, and then we had a clear V-shaped recovery on 15.5 for a nice push out of that area. Okay, and so going back over to this area here. Okay, I'm gonna go back to 5 and 1 minute and 15 and 5. Alt G. Okay, so what I was looking for here, okay, when it comes to Tuesday is like I said, price was, overnight shorts were definitely in a profit. There were a lot of people that came in and shorted this NQ, and I'm sure they forced themselves into most of the move. I felt like most people didn't really get in at New York Open, and if they did, it was a pretty difficult move when they started to push up here. It probably scared a lot of people, but I did feel like a lot of people were in at 27,900. And so what I was wanting to do when I did catch my buy position was I was wanting to play back. Oops. I was wanting to play back to where an individual would have shorted New York. Okay. So for example, right, I thought most people would have shorted here with a great area to short. Okay. And to push the price down. And then as price would have went against them, I just want to know where their most likely their risk was. And I felt like most of their risk was going to be sitting right above that candle. Okay. And so now when you start to form this bias, what I'm looking for is a 5 minute sign of strength, right, at the right time. Now, they did they have two different schematics. On the bullish side, like when you're looking for shorts, sometimes they'll do what I call an up thrust after distribution. So like you'll think it's a short, like it'll go like this, and then it'll do another up thrust right after it was kind of starting to show it's wanting to distribute. Then it'll distribute out. Okay, and so same thing with this. If you kind of see how it comes down and makes this low, right? So this 5 minute area is what I'm basically talking about here. Price is coming down, making this low, and it kind of shows the signs like it was going to engulf and start to show us the signs that we want to go, right? 9 to 905, right? And we were looking for an area in here. So I believe we took an area in here after the draw on liquidity. I think we took a buy in here, and then it went up, went in our favor, was able to close some partials, and then the rest came down to scratch or a break even. Okay. Now, the one that we ended up taking after the break, okay, right, like after we took a break and we came back for the last 15 minutes of the hour, was right here. I said 930 would be a pretty good price if that V shape was starting to recover. Okay, and I think I was saying that actually like in the Discord. I'm all good for now. Yeah, I have to go back and actually read through all that part. But basically, we come back into the signal. And so we ended up getting this 5 minute candle here, 920 to 925. And then I was wanting to attack even just back up to the 50 level. Okay. And so drawing a line down the middle of that candle and then waiting for, a true 1 minute mitigation that we could play. Now, like I said, me personally, on CFD, I was able to find that position right in here because I like to position my trades on solid 1 minute price, but I also want to make sure that I'm inside right the 5 minute demand candle, right? So in a situation like this, I want to make sure that like if I take a 1 minute entry, I don't want to take it as it's expanding up on the 5. I want to be taking it inside the mitigation, inside the demand candle. Okay. And so that's just kind of like a tip that I like to use on my entry strategy. Now, um, what we ended up waiting for, what I thought was a sweet move, and it was kind of like a breakout continuation buy position, which I actually feel like the mitigation and where they really, just draw people and hurt people is a tougher position. But either on the sell side or the buy side, I'm really, really fond and really good at me personally, I believe, at finding these continuations that are pretty easy, like layup fill type of trades. Okay. And so what it looked like on the 5 minute, it was 935 going into 40. They did a 5 minute engulfing. So all you could essentially see was this at one point, right? As it was breaking out of the area, right? That's all you could essentially see. And then I was calling out buy positions off of this break. So I was calling it anywhere down, like when they have the candle here, if you can kind of see how it was starting to form here. I don't want to like do the replay mode again there, but basically it goes up, and I was starting to say if it comes back into the 20 level, 720s, right? We wanted to attack right inside that 5 minute demand candle, okay, to go to the upside. So even if you waited, like I told individuals, like even if you waited for the 5 minute engulfing 35 to 40 and then waited for 40 to 45 and you bought um, with a 20 handle risk in this situation here, most likely if you waited till this time here, like once the 1 minute was like playing here, you had a chance to push that play up for over 100 plus points. Okay. Now the overall target from the CFD position, because I had that one from down in here, and then let's just call this an add-on position. The real target that I was looking for, like I was saying, was either going to be where the New York shorts were still sitting with their liquidity here at 28,000 whole level, or right above, right, where most of them are going to be sitting and placing their risk, because that's where people place most of their risk. So that trade did end up turning into, if most people got out, I believe above here, like over 14 times our risk, right? And if you held to the breaker structure, that was over like 17 times your risk, right? And if you still had the CFD position, right, and we do the same things over there that we do here, right? We were looking for that, and we did end up clearing that. And that was a beautiful 1 to 20 on those setups. Okay, it's a beautiful trade yesterday to attack those shorts, even though we did miss, I think, a pretty easy play. Uh, but it wasn't even in the first 15 minutes. It was in the first 15 minutes, but not after 45, right? So I like to wait usually until that's over. Now, let's jump into today, okay? Let's jump into today. Okay. Now today I'm just gonna focus on the stream, what we took on the stream. okay? Because me going over the bounce back play that we took for CFD would be just insane, okay? Okay, let's go here. Oh, is that the right day? Yeah. But the short, because we had been doing this all week, right, was beautiful, okay? Now, let's go into some context for the day, okay? When we look at the day, when we're coming into this, I know it's kind of a lot going on here because we've had a lot going on. But when you look at the context of the day, okay, for Wednesday, Wednesday opens here. So let me move some of these lines here, like LEDs, and I can move this box here. I can move that for now. Okay, so let's focus on the entry, okay? So the actual trade that we took today, let's go over here and look in the Discord. July 29th, correct? All right, so July 29th. So the sell side move that we ended up taking. Now, I'm going to explain why I didn't take it up in here. Like I usually take it above New York Open and bearish conditions, but it just wasn't as clear to me today. And we were able to take that position down to TP, right? We were looking for these double bottoms here and the right below the 750s, and then we were also looking for obviously low of day and that previous day low, right, where people were probably just sitting at 27,600s. Okay, so walking you guys through the entry. Okay, what I was seeing personally was, let me move this out of the way. At the equities open, there was a lot of manipulation, right? And so a lot of people got stuck, I think, trying to buy. And I almost did myself as well because I really liked how the first candle, this was 830 to 835, right? They come down very quickly, right? And this is that 1 minute price. They come down very quickly and they draw on this low, but they're holding this 27,850. Now, the next 2 minute or the next candles here, 32 to 33, and then 33 to 34, then 34 to 35. So this candle right up in here, okay, that 5 minute body on the left closes strong, but if you look left, it's in 27,980 supply. Now, also something about trading, right? Buy low, sell high. If you look at where most buyers give back orders and sells do fill, is going to be what I just said, buy low and sell high. So the high of day at this point right now um, was here, right? And so they just go right above that daily and they start to give back those orders inside that supply and price breaks down. Now, when price breaks down, the reason why I'm not shorting it yet was because they drew on that liquidity, and it's still at this point to me kind of looks a little bit bullish. Okay, so it's almost like they've drew on the liquidity, they rally, right? They show signs of strength, and maybe they're gonna hold the 27,865 zone. So I'm not really for sure at this moment if I want to go short, right? At that exact moment. And if I did, I wanted to go short above New York Open. Okay, so if I went short, I was looking to do it somewhere closer to the push up, right? So this push up candle here, 40 to 45 in the last 15 minutes of the hour. Now, let's go back here. Now, like I was saying here, at that moment, which what I could actually see though, right, was it wasn't showing me signs of weakness yet. Now, what got me really excited, okay, because on that 5 minute, this is all you could see as well, right? This is what it looked like. They drew on the liquidity. There's a demand candle looking left to get right, and they had just drawn on early buyers. It felt like from the 7:30 time on these 20,000 or 27,850s, okay, and that 1 minute structure was looking somewhat bullish, like it wanted to go through the 28,000. 28,000 whole level, right? The way it looked right here. Now, when you go back to why I waited to take the order and I didn't take it up there in the highs, was because of this, okay? That next candle, we like to take trades in the first 15 minutes of the hour, the last 15 minutes of the hour. This candle here, 845 in the 50. You guys see how that candle closes body, it closes lower low, okay? You can see on the line graph, it's kind of hard to see, but this body closes lower low. Now, I was saying if it closed lower low, I would be willing to, because I had watched a lot of tape over trades we've already taken this week, right? That this candle opened here, 50 to 55, and it opened bearish. I was looking for, if a fair value gap was filling and just going to fall, I was looking for a 1 minute order block or a supply candle to frame up 20 handle risk for 60-point gain, or 20 handle risk for 100-point gains. Okay, so back to the trade, like I said, that we took today, and where I ended up taking it, okay, was I ended up taking it after, like I said here, we got this 5-minute close at those 27,860s, and then I wanted a 20 handle risk for 60-point gain, or 20 handle risk for 100-point gain. Now it's a little bit off on, like I was saying earlier on this, just because I was showing it on the other window, and just trying to take it, and I had already parceled out 2 contracts at this point. So I think I was in a little bit higher, like in those 835s, but I don't know exactly. Okay. But we were looking for our risk to be on what I called out. Like I said, was this 5-minute high, and then this 1-minute supply order block candle, pretty much the high of that candle I thought would be safe. And we were looking for that to travel down to, okay, the equal lows that we had identified pre-equities open, that I thought were equal and clean, that also had a nice fair value gap sitting at 27,700s. Okay. And so beautiful setup down into some solid liquidity, right? Where we were able to partial the move out and go break even. And then the full delivery for futures ended up coming for me after we delivered through the low of day. We came through, this was around 9 a.m. to oh yeah, this is what I want to show. Okay, so this was going to be 9 a.m. Price comes down and then starts to show a little bit of strength, and then this was 9:05 to 9:10, our magical time in the setups, right? That we've been finding, and we get what? We got a 5-minute bearish engulfing candle. So I thought that was a beautiful area to add on, right? Because you're filling a 1 hour and 15-minute FEG at 27,800, and you had a clear target of low of day at this point still, and previous day lows. Okay. And so I thought if you didn't get inside of this area here, because it was a little bit of aggressive move in 27,850s, I thought that another opportunity at the right time, 905 to 910, even if you waited for the 5-minute bearish candle to engulf and for it to just test up into the supply candle and then come in with your, 1 to 5, 1 to 3 mindset, right? And then you're looking left to get right. So your eyes are going to be focused on the liquidity here, right? So you could be attacking down to those 27,600s. I thought that was a beautiful move right there, because you had a good fair value, you got fill, you had a good 5-minute candle closure of weakness, and then you had a test of that area. So essentially it would have looked like this at one point before you took the entry, and that was a clear confirmation based on that candle closure. Okay, for me, I've looked at a lot of charts. That's a clear sign to me, based on what we were looking for on higher time frames, that if price tests back up into this level and can't go, it's coming for the wick low. Okay, if price can't go, it's coming for the wick low. Okay, and so that's how we were able to clap the markets today on the sell side moves. Right, we ended up ending the stream with bangers. I'm trying to see where I showed you guys the trade already. So we ended the stream with over 5 times our risk, and price delivered really well. Now, later on in the day on personal accounts, I did start to look for, this was around 9:33 a.m. or when was this? 9:33. This was a little bit after, so 11:45 is when we started looking. Live trading chat. Let me look here really quick. Okay, and we were looking down here at 11:10. Okay. So I'll just walk you guys through it. But basically, as we were done with this move, we were completely, out of the shorts. It's the same situation, right? When you're looking at when the shorts are going to cover, where the New York players trailed risk, where the New York players just sitting, right? And after we got this move down, right, and we had this fair value gap area kind of fill right here, and then we like break lower from 27,800s, it's all about timing, right? The algorithm loves time. So 11:15 right here on the left to 11:30, you get a bullish engulfing candle. Now, me personally, because I'm looking in the first 15 or last 15 minutes of the hour, I'm actually looking for this response to happen down here where it ended up happening. Okay, but we ended up getting that candle to close, which was that 11:15. So it looked like this. Okay, there was no signs of strength or anything like that. But because of how the candle closed here at 11:15, this is what it looked like now on a 1 minute, right? It was completely capitulated. Overnight players were definitely in a profit. New York shorts were definitely in a profit, okay? And then all you could see on a 1 minute was this right here. And so what I was looking for was a 20 handle risk, right? I was really just wanting to play a position from here, 27,444, right? Like right in here. I was really just wanting to play a position back up through to fill the fair value gap at 27,700, right? Which was over 10R, 20 handle risk for 200 plus point gain, okay? But I did end up playing that area, okay? And then we ended up 15-minute engulfing, and then the next candle was 11:30 to 11:45. We ended up closing like this, bearish, right? Which was awesome because we had shown the signs of strength. We had shown that possibly the overnight players were wanting to short cover, okay? And then from that perspective there, that's where I was able to, inside this 15-minute candle here, as you guys see here is the right time, 11:45 going into 11:50. 5-minute candle starts to engulf after it already showed the 15-minute strength. And like I said, you could have bought another position here in the 528s, right? 1 to 5, 1 to 3 mindset, and you're looking to attack, right? Where most likely the individual shorted down the New York. Okay, I said most people would have probably got the position right here in this yellow box, right? Knowing how I would like to take the sells, right? Most people are going to be here. So on the buy side, on the flip side, right? Where's the money, right? Where's liquidity sitting? Liquidity is sitting here. Liquidity is sitting right above this area here. And obviously liquidity is going to be sitting at 27,900 in daily open, okay? And so we were able to take that trade. Now I wanted to take that trade to high on day, right? Which would have been here, right? 28,188. But I was able to take that trade to here to 28,060. I actually told individuals, hey, I'm going to go walk my dog as price started to explode through the levels here. Like as we start to rally up, going into like 12, 1 o'clock, and then FOMC, right? So the bigger release of the news. I was like, I'm going to go walk my dog right around here, like 13:45, so 1:45 p.m. And I said, I'm trailing my wrist to daily open, okay? Because there was really nothing else that I could do, okay? Let me see if I have that here. Okay, so I put that right here. You guys can see that here. So right, this is going to be the time, right? 152. If we hold 28,000 whole level strong, we will push HOD, right? Trailed wrist to daily open on NQ, time to walk diamond, okay? This was at 152. If you go back and look, right? Right here, this candle is 1350, so that's 150 to 155. I had trailed my risk up to daily, price rolls over. I was able to secure 20 times or not even 20 times my risk. That was on the add-on, right? From this trade here to daily open, trailed risk, we were able to do about 25 times our risk. Now, results aren't typical and we're not typical, okay? But the position that we gave out on the New York Open actually helped us to attack back in the second half of the day based on the criteria and based on the concepts and the blueprint that I teach. Okay, so that's the 3 days, right? We're gonna see what we get for tomorrow. I feel like tomorrow's gonna be pretty epic. They're already pumping price and doing engineered prices, 300 points on the overnight. And so I went through each day. Okay, I went through Monday, how we could have probably capitalized on shorts a little bit better. Okay, I went through Tuesday, where we did capitalize on capitulation bounce plays up to the upside. So like right in here, right, we capitalized on that to the upside. And then I talked about Wednesday, right, which was today, how we ended up capitalizing on sell side moves through low resistance lows, and then how we ended up playing the bounce back up to the New York shorts to clear out the London highs, and then to watch all those buyers, collective behavior, take profit all at the same time, and price die from 28,000, 28,000. What is that? 056 down to 27,331, 724 handles in 1 hour. Okay. And so beautiful day. We'll see how the week closes. And if you guys have any questions, definitely DM me. If you guys like the way that I break down the charts and have things set up, and if you're a part of the free chat and you're looking to join the premium Discord, just DM me if you have any questions. As well, again, like I said, be on the lookout for the RSV blueprint coming out here in July. So just everything, how we trade, what times we like to look for trades, the criteria that we look for to get in, what higher time frame stuff, what do we mark up every day, just everything, the psychology, everything. Okay. So I appreciate you guys. You guys have a good rest of your night, and I will see you on the next one.